Good morning and welcome to the Killik podcast for Friday the 11th of March. So we had the fireworks we were anticipating yesterday with Mario Draghi and the ECB. So what did we learn? We learned that the downside risk to the euro economy and that inflation and growth is coming in just below trend. We also learned that ECB is willing to act and willing to do that through increasing the availability and reducing the price of credit in the European economy rather than trying to reduce the euro and make the currency more competitive. So that is an acknowledgement that firstly they need to protect the transmission mechanism of that credit into the economy, i.e. the banks, and that's something that we'd mentioned last week that we're hoping for. And secondly, that a competitive devaluation against the major economies like the Chinese is not a road or a path they want to go down. So what did they do? So we had a 10 basis point cut to deposit facility. That was expected. We saw an increase in the monthly asset purchases by 20 billion euros to 80 billion euros per month. That again was expected. We saw the inclusion of investment grade euro denominated non-bank debt. That was a surprise in the pool of assets they're willing to buy. And we saw another 4-year targeted lending operation, LTRO facility, that will now go beyond Mario Draghi's term as ECB president. So what was the market impact? Well, we saw a delayed response. So broadly, it's been positive for corporate debt because there's a bigger buyer in town, and for equities because the lower the price of debt is, the more you're going to see in terms of buybacks. We also saw, as I say, this targeting of lending rather than currency depreciation. So we saw a better market for the banks rather than the exporters in Europe. One of the key things yesterday was a very big turnaround in the market throughout the press conference that Mario Draghi was issuing. And that's largely reversed itself today, but it was related to Draghi's comments about they don't necessarily see themselves reducing rates any further and not introducing a tiering mechanism on the way that they charge a deposit rate on banks is the desire not to signal that they want to bring rates down further. So that was a key message for the euro. So initially we saw the euro sell off on the initial announcement, and then we saw a very sharp rally in the euro on those comments that we'd probably seen a base or as far as they wanted to go in terms of the negative rates. Again, that's good for banks. So the targeted long-term refinancing operations will lower the cost of funding for banks. What this means is that if banks are willing to lend in the way that the ECB wants them to lend, they can actually borrow money off the ECB and be paid for that. So they can borrow money at the negative 40 basis point rate, which means they get paid to borrow and then they get paid to lend again. So that profitability offsets the negative rates on deposits that the market has been worried about. So we saw a very big rally for the European banking index, which has really accelerated today. So that was better than expected for that sector. Outside of that confirmation that we saw in European growth rates, we saw a further lurch down in emerging market data on the macro basis this week, as you can see here. So that further deterioration alongside the European deterioration we were talking about last week really does emphasize the probability of a rally in the trade-weighted US dollar. And we're now seeing core inflation start to pick up in the US, which will further put pressure on interest rates and therefore the US dollar on the upside. So in portfolios, we are certainly favouring financials, which are on 3-month relative lows, and also on cyclical troughs in terms of price to book valuations, as you can see from this chart, against the oil sector. So here we've got a chart of Brent, and looking at the RSI, the relative strength indicator, we can see that this is now at fairly high overbought levels in terms of short-term technicals. So looking at the week ahead, relatively quiet in terms of Killik & Co stocks. On Thursday, we've got Heidelberg Cement, and that's the only covered stock that is reporting next week. Thanks for listening. Have a good weekend.